Tax filing season officially begins today. Jim Daniels of UHY Advisors is here now with a lot of important information. The first, probably most important thing is the difference now with the Affordable Care Act, and it impacts us with our taxes.
Yes, thanks, Kelly. Thanks for having me. Yeah, basically the rubber is meeting the road in terms of tax compliance with the Affordable Care Act. Basically, any individual who gets health insurance through their employer or the government shouldn't really have any issues because they'll just check a box that they're insured. But individuals who purchased insurance through the health insurance marketplace should take note. They shouldn't file their returns until they receive at the end of the month or early February a Form 1095-A, which is a health insurance market statement, which sets forth their information that they paid in premiums and the credits that they've received. And
there's also an additional form on top of that, the 8962.
Yeah, what the individual has to do, they have to when they bought the insurance last year, they claimed or they based the amount of their payment on estimated income. So now they have to reconcile that to their actual income. And in some cases, they may end up paying more premiums in a premium tax credit or receiving some money back.
So then we go to the subsidies. And that was based on income as well?
Sure. The subsidies were based on their income in 2012.
Okay.
Okay, and that was an estimate. Now it has to be reconciled with their actual income in 2014. So what's really important is for those individuals who purchased insurance through the marketplace not to file their tax returns until they receive that Form 1095-A.
Right. Okay, let's move on to other things that are new this year.
Sure. Basically a couple things have changed in terms of, being able to defer more income in your 401k plan. The amount that can be deferred is increased to $18,000, and for those people who are over 50, it's increased to another $6,000, or the catch-up provision. Okay. Also, people are able to put a little more money in their cafeteria plans in terms of paying medical expenses, which is important, another $50 over last year. And finally, people who want to take money out of their IRAs or borrow it have to be careful. I mean, in the past, you could take out multiple times, borrow from your IRA if you put it back within 60 days. Now you can only do that once within a 12-month period. So people who have kind of used that as like a little, midterm financing during the year have to watch out that they only do it once.
Okay, what's the educator expense?
Well, there are a lot of provisions. As always, at the end of the year, Congress comes through right at the last minute, and they extended some tax provisions through the end of 2014, and one of those was the educator expenses. Teachers who go out of pocket and aren't reimbursed are able to deduct $250,000 or $250 again. And also there are, they have extended the tuition expense for $4,000, and also the residential energy credit, which enables you to get $500 for expenditures made for insulation, roofing, windows, etc.
So there are credits out there, you just need to know where to find them.
Yeah.
That's where you guys come in handy.
Exactly.
All right, Jim, thank you so much.
Thank you.